And now, the moment you've been waiting for all week, Courtney Smith's weekly video newsletter, TradeSmith.
Yeah, last year was awesome. Really, really awesome. And I think this year is going to be awesome as well. Let's take a look right here. This is something from Stock Traders Almanac, which I recommend. And they always have this, what they call the January trifecta. And the first part of the January trifecta is the last 5 days in December. And they call that the Santa Claus Rally, or I think it was called that before they came up with the term. But anyway, the Santa Claus Rally is the last 5 days in December. And so far this year, it was up. As you can see down the very bottom left-hand corner in 2017, the market was up 1.1% during that 5 days. Now, the next column is FFD, first 5 days in January. Well, 4 out of the first 5 have been up, so I'm pretty sure that the FFD, the first 5 days, is also going to be positive. The third column is JB, January Barometer, and we have to wait till the end of the month. And if January is a higher month, then we would get the January trifecta with all 3 indicators being bullish. Now, notice that last year, all 3 were bullish. And when we see all 3 bullish, we're talking about 27 out of 29 years being higher. Now, we're 2/3 of the way through the January trifecta. So that portends that we're going to have an excellent year coming up. And if we can get January to be a higher year, a higher month, and there's no reason why not, then we could see another killer year. Now, let's take a look over here. One more picture here, and then we'll get to your favorite part of the presentation. So here it is right here. This is from their latest alert. Once again, highly recommended. When all 3 are positive, as was the case in 2017, the next 11 months have been up 89.7% of the time, with an average gain of 12.9%, and the full year advanced 93.1% of the time, with an average S&P 500 gain of almost 18%. Hey, everybody. Courtney Smith here with your weekly video newsletter, TradeSmith. Very excited to be here. Crushed it last year, intend to fully crush it this year. And of course, this tells you, it doesn't tell you anything about whether you're going to crush it this year or not. Okay, let's take a look at these markets. As you can see, and as I just mentioned, the first 4 days of this year have been straight up. So Monday will tell us if the first 5 indicators, first 5 days of January is going to be a bullish indicator. Well, it would have to drop a big amount for it not to be higher for the last 5 days. So even if we have a down day on Monday, it's almost certain that we're going to see a higher first 5 days. That's bullish. Now, another thing about this chart, I've been worrying about the purple predictor. The purple predictor has been going sideways to down at the same time the market was going up. And that divergence is usually resolved in the direction of the purple predictor. But in this particular case, the purple predictor is now skyrocketing up just as much as the market itself is skyrocketing up. So that takes care of one of my big concerns in the market and now suggests that we have much clearer sailing. Now, we'll get to seasonality in a second. The Dow Jones, look at what happened. Look in the upper right-hand corner. The little green line there took off to the upside, showing increasing buying pressure. The red line went down, showing decreasing selling pressure. And of course, the market took off. Once again, we've moved from something which was still bullish, but trending in a less bullish manner, to clearly bullish. Nasdaq, same story, except here we already had the purple predictor bullish. It's now that much more bullish. All right, seasonality creeping higher, made a new all-time high on Thursday. So this indicator is also turning more bullish. Look at the purple predictor. In the last week, it skyrocketed up. It went from being significantly below the price to being on the price. So it caught up to the price action after having been below the price action before. And the purple predictor, if it's below the price action, that tends to be bearish. However, we need to get below 148 before I'll turn off the green light. Right now, all of our positions are double size. So for all you fully paid up members, you know all the winning trades. They are double winning trades. Double winning trades. All because of our killer seasonality indicator. Seasonality here, this is the only thing really now on the horizon that's poor. The seasonality for midterm elections, pick whichever line you want, it's negative. The market usually drops into about the third week in January and then takes off like gangbusters. And so this makes me nervous because I'm a big believer in seasonality. So this makes me nervous. So far, the price action is not there to support the negative seasonality, but we still need to be looking closely at this. Yield curve, this is not going to be negative, but it is going to keep a cap on price action. Asset allocation, the money is just one of the big reasons why we're seeing this rally in the market, and in particular in the last week, has been massive amounts of money coming out of the bond market and flowing into the stock market. So that's new cash coming into the bull market in stocks. You see, you got to be coming here to this podcast every week. I'm telling you, you're seeing stuff you don't see anyplace else. You're understanding the market on a level that nobody else is showing you. Okay, the stock market risk indicator. This has been another thing it hasn't been bearish, but it really hasn't been bullish. But look what happened in the last week. The stock market risk indicator skyrocketed up, which means that the market, they're saying, you know what, we don't really want to be in defensive stocks. We want to be rocking and rolling. We want to be getting aggressive. Things look fantastic. We want to be long stocks. We don't want to be in bonds. We don't want to be in cash. We're willing to take risk. We don't want to be in those old boring stocks like utilities where we can hide out. No, we want to be aggressive and go buy, hot technology, biotech, riskier stocks. Global shares also sharing in this explosion. And in fact, really, global shares have been the leader over the last several weeks. And I don't really have a position there. I was always in the U.S. stocks. I missed this move, but they're doing great. And just about every market in the world is doing great. From Australia to Austria to Switzerland to France to Italy to Greece to Singapore, you name it, they're doing great. So that says, I've been telling you here for months about how the global economy is getting better, and the stock market globally is now confirming that. And remember that the stock market is a leading indicator of the economy. So look for a stronger global economy around the world. Bond market. Well, I'm going to show you. Let me jump to I'm just going to show you here. You see, the purple predictor is still bullish, but let's take a look at our indicators. Now, the green line is interest rate yields. Every single one of our indicators, the yellow, blue, and charts, all are pointing for higher interest rates in the bond market. And that has a lot of ramifications. That's good for financial stocks. For fully paid up members, I have a new financial stock that I'm going to recommend. Or actually, I'm going to go back to an old faithful that's done us well in the past. This also means that the dollar should go up, and yet here we are in a bear market. Now, I told you 2 weeks ago that if we break that red line, we'd want to be short the dollar. So hopefully, if you're playing the dollar, you are now short the dollar. Gigantic head and shoulders position says that this market can drop maybe 3% more. We can get down into the high 80s on the dollar index. And of course, if the dollar is going down, gold must be going up. Now, look. It's up 15 out of the last 16 days. So when gold goes up 15 out of 16 days, you know we're going to see a retracement this week. So look for a retracement this week, maybe down to 1,300. That's going to give me an opportunity to get long the gold market because I believe that the indicators are not bad. Now look at this. They were all very bullish last week, but notice they all kind of hooked over to a bear side this week. So that's another reason why I expect gold to sell off a bit this week. And then we'll be able to at that time see how strong this market is. Will these indicators start to move back up and be supportive of gold, or was this last 15 days just a one-shot, one-trick pony? Well, we're going to have to see that next week. So this coming week that we're talking about is very critical because we're going to be able to now see if we've got a sustainable bull market. We're going to be able to find ways to get into the market so that we can start to make some money here as well. Oil continues to move higher. It's bullish. And of course, I haven't been a big fan of being on the long side, which has been wrong, but there you go. All right. All you freebies, love having you here. You know what you're supposed to do. You're supposed to subscribe. It's obvious. How much money do you want to make? I mean, really? Shoot. I got tons of money to share with you every single week. Subscribe. You're going to love it. All right. Fully paid up members got new trades for you. Got some very, very interesting high-level analysis coming up. So stick with me, fully paid up members. Freebies, we'll see you back here next week. Thanks.